Hello, everybody. Darwin Fortuna here. Kevin O'Leary spoke to the Senate committee that was actually interviewing many of the people involved with FTX. Kevin O'Leary is a member of the Shark Tank. Everybody has heard of it, but also one of the shareholders of FTX and one of the big promoters of FTX and Sam Bankman-Fried. He was interviewed, and here's what he said. Watch now.
Mr. O'Leary, welcome.
Thank you very much. Chairman Brown, Ranking Member Toomey, and members of the committee, thank you for inviting me to testify about crypto and the collapse of FTX. I'm the chairman of O-Shares, an ETF indexing firm, and also a private equity and venture investor. I support entrepreneurs at every stage of their journeys. I have dozens of family-run businesses in our investment portfolios. My extensive social media platform enables me to tell the stories of their products and services to help reduce their customer acquisition costs. It's a model that has worked well for over a decade and helped support so many small American businesses, which create over 60% of the jobs in the American economy. In 2017, I was a public critic and skeptic of crypto and blockchain technology. As the global regulatory environment began to open up in 2018, I began to invest. Now I am a shareholder in multiple companies involved in crypto technology, including WonderFi BitBuy, the largest and first regulated broker-dealer crypto exchange in Canada, Immutable Holdings, a developer of NFT technology, and Circle, the company that brought USDC stablecoin to market. I've also invested in multiple crypto tokens, infrastructural level 1 and level 2 blockchains. I am of the opinion that crypto, blockchain technology, and digital payment systems will be the 12th sector of the S&P within a decade. Many of these technologies are going to disrupt the existing financial services sector with faster, more efficient, more productive, and more secure ways of investing, paying, transferring, and tracking assets. As you are aware, Bitcoin, a store of value, is not a coin. It's software. Ethereum is software. Blockchain is software. In the last 30 years, every American enterprise has driven major efficiencies using various versions of enterprise software, and crypto is no different. The potential of these crypto technologies is astronomical in scale. In August of 2021, nearly 3 years after I started allocating capital to the crypto sector, I entered into an agreement with FTX to be a paid spokesperson. I was paid approximately $15 million for these services, plus approximately $3 million to cover the portion of the taxes due. Of the remaining amounts, approximately $1 million was invested in FTX equity and approximately $10 million in tokens held in FTX wallets. The equity is now most likely worthless, and the accounts have been stripped of their assets and, interestingly, financial records. I've written all off to zero. Because I was a paid spokesperson, however, I never invested any capital from our partners or LPs in FTX. The capital lost was from an operating company that I had 100% ownership in. I'm using my own capital to pursue record recovery of the FTX accounts so I can conduct a forensic audit. The truth of this situation will be discovered by following the transaction trail after obtaining the records. I've applied for membership on the FTX Creditors Committee in connection with the bankruptcy proceedings because I feel obligated to pursue the facts on behalf of all stakeholders and believe my perspective of this situation will be helpful to the other creditor committee members. The collapse of FTX is nothing new. While this situation is painful for shareholders, employees, and account holders, in the long run, it does not change this industry's promise. Enron came and went and had no impact on the energy markets. Bear Stearns, Lehman Brothers' demise had no impact on the long-term potential of American debt and equity markets. I'm only one of many investors that have experienced this loss. However, this changes nothing in terms of the potential of crypto. In fact, the recent collapse of crypto companies has a silver lining. This nascent industry is culling its herd. Going or gone are the inexperienced or incompetent managers, weak business models, and rogue, unregulated operators. Hopefully, these highly publicized events will put renewed focus on implementing domestic regulation that has been stalled for years. Other jurisdictions have already implemented such policies and are now attracting both investment capital and highly skilled talent. In the U.S., we are falling behind and losing our leadership position. I understand why many leaders in the banking industry are open skeptics, calling for the banning of these new crypto software technologies. Disruption is always uncomfortable at first, and entrenched businesses abhor new competition. But it has been proven time and time again that disruption is absolutely necessary in advancing the economy. There is the risk of investing in crypto, and then there's also the risk of not investing in it and letting others accrue its benefits first, essentially gifting them a competitive advantage that could be very, very hard to recapture. So where to start? We need to clear policy and regulation for the crypto industry, its entrepreneurs, its developers, and its users. Congress should start by passing bipartisan legislation that creates a sensible regulatory framework for digital stablecoins backed by the U.S. dollar. Why? A well-regulated stablecoin backed by the U.S. dollar and other high-quality liquid assets could become the global default payment system over time. The U.S. dollar already denominates the price of oil and other commodities. Why not everything else? What could be more bipartisan than this? Let me close with this. We need to get to the bottom of what happened with FTX, but we can't let its collapse cause us to abandon the great promise and potential of crypto.